Well, the mutual bank sector is relatively new in Australia, but already worth over $85 billion, comprising almost 90 credit unions, 7 mutual building societies and 10 mutual banks. Some say it represents the 5th pillar of banking in Australia. So what are the mutual benefits of mutual banks? Well, for more, I'm joined by Steve Mickenbecker, the Head of Research at Canstar. Steve, thanks for joining us.
Pleasure, Ingrid.
So mutual banks are a bit of a new concept in Australia. Can you talk us through it?
Yeah, they are. Look, the first mutual bank appeared on the 1st of September 2011, so that's less than 2 years old. The latest was just a week ago. So Bank MECU was the start of all this.
Yep.
Bank Vic was Vic Bank was the most recent. They're all a new initiative to really strengthen that next tier down. So we've got the 4 pillars, the big 4 banks, and then we've got credit unions, building societies, and the new mutual banks coming in under that. The government has encouraged this. The idea is to really allow other people to use the forbidden word bank. They could say they're providing banking services before, but only a very select club could actually call themselves bank. Now they can call themselves bank, and that aura of stability, dependability, safety that goes with being a bank is now available to credit unions and building societies who seek to convert to a mutual bank. So the federal government reforms in 2010 basically just allowed them to call themselves a bank? Well, exactly, but they had to qualify. Right. So 20 institutions, back in December 2010, 20 institutions actually already met the government's requirements, so capital requirements, etc. 9 of those have since converted. So it's all about a new, really appearance in the market. Yep. So can you talk us through some of the benefits of a mutual bank and really how it differentiates from one of the other 4 banks? Okay. All right. Well, first up, they're much smaller institutions that were really targeted to a certain segment. So they were targeted to police, nurses, teachers, the people of Toowoomba, and so they were very targeted. But smaller institutions that could potentially, and I think perhaps are, a little bit more personalised in the service they give. And really that reflects in the satisfaction that their customers have. They seem to register higher satisfaction levels than the big 4 banks. Well, I know you have a survey on it, actually. Yeah, we do, and they came out well ahead. Now, bear in mind that the big 4 banks have to put up with all of the negative publicity, and they've got 1,000 branches across the country, so all of that's a lot more challenging for them. But they come out ahead in that regard. The other things that they have, not the same, they don't have shareholders. So the institutions are there just for their customers. Now that means that they can pass on pricing that maybe the big 4 banks can't pass on, and give more attractive deposit rates and loan rates than the big 4 have available to them. Nice big benefit. Yeah, that's a big one. So how can they take advantage of online banking? Because are they able to offer the same sort of things that the big 4 can? Yeah, look, they can't invest as heavily. So don't expect fancy apps, don't expect very state-of-the-art services. But they can provide, and do provide, good quality banking online. So they do tick that box. And the beauty of that is that that people can access a credit union, a mutual bank, that prior to this really wasn't accessible to them. With only 25 branches or something. People don't need to go to branches that often anymore. I guess a question that certainly comes to mind when you talk about the smaller banks is safety of money. People say, well, is my money as safe in a smaller bank, a mutual bank, as it is in one of the big 4? Yeah, look, it is. The government guarantee that's extended to Australian deposit-taking institutions applies up to $250,000 on your deposits. So the security's there. Don't worry about your security with either a credit union or a mutual bank or a building society. And are they regulated? Oh yeah, they are, absolutely, yeah. The government, with mutual banks, the government set quite strict guidelines about who would qualify, the credit, the level of equity, etc., etc. So they're regulated by APRA just as the big banks are. Exactly the same then? Yes. Okay, what about rates of returns? Do they tend to be higher or lower? Now, I know we've got a chart that sort of shows well, this, so we'll try to bring up the chart. Shows, I think it's going to show major banks versus mutual banks. Yes, exactly, yeah. There it is. So what I think this one shows deposits, so term deposits and online savers, and what it shows is between 0.2 and 0.3% rates higher at mutual banks than the big 4 banks. So that's being passed on directly because, you know, really you're not servicing a separate group called shareholders.
Yeah, exactly.
It's all being passed back to your depositors.
Right.
Now, there's an even more interesting story in it because when you look at the same chart compared to credit unions as a group,
yep.
this group of 10 mutual banks are a little bit ahead of them too, you know, about 0.1% on both measures. So it's, what it says is that it's sort of an elite group of old credit unions and building societies who are now taking a much more aggressive and outward-looking stance in the marketplace and really offering benefits back to their customers.
Can they sustain those levels of return, though, or is that just to sort of get customers in?
No, look, those have been sustained for 2 years.
Yeah.
No, I think they can, and I think they will, because they want to grow.
Yep.
They've used the word bank in their brand so that they do grow, and they have big ambitions. So I think we're seeing a group that will continue to pass on very good home loan rates and very good deposit rates to their customers.
All right, now you've looked at 9 mutual banks in terms of value, 10 if you include the new bank Vic, which is obviously the old police credit union.
Can
you take us through firstly just how you measure these banks, what metrics you looked at?
Okay, now we rate almost every product in the market.
Yep.
The home loans, credit cards, personal loans, deposit accounts, etc., etc. To do well in this award, you have to do well in all of those categories.
Yep.
And it's against this peer group, but the ratings are against the whole market. So you've got to do very well there. Plus you have to have some institutional things going right. So you have to have good access,
yep.
you have to have good online services, etc. So whatever institution does well here has done very well across the board.
All right, so who is it? Who's the top?
Well, Bank MECU came out on top. Now they were actually the first of these new mutual banks, but they've been around for a long time as a credit union. So it was members and education credit union, but was a merger of some 60-odd other credit unions. Now, they've done really well in a lot of things. They've got a very good rate, 10.39 or something home loan rate. They've got a 10.14% credit card. They've got a no-fee credit card. They're all 5-star products. They do very well, very good online savings rates, etc., etc.
Yep.
So their products are very good. They have 25 branches and a good online service that's optimised for mobile. So they tick most of the boxes there.
Yeah, they sure do. So you would only need to be a member of a mutual bank. You wouldn't need to be a member of a Big Four and a mutual bank.
Well, you don't have to be.
Yeah.
You don't have to look beyond here.
Yeah.
But we'd never say to people necessarily, do all your banking in one place. Pick and choose. You know, pick and choose. But the important thing is that the Big Four offer very good services, but so do these other options.
Equal. All right. So let me ask you, do you think that this space is going to continue to grow then?
I think it will. We've seen over just a bit over 12, 16, 18 months, 9 of the 20 move straight on in and convert to mutual banks. I think we'll see more of those credit unions and building societies move in that direction. I think they'll be lured by the use of the word bank and the success that will give them in the marketplace. So yeah, I think it's a growing space. It's a small part of the market. The whole mutual sector is only 87 billion compared to 2,000 billion odd in the Big Four banks. But it's an important and growing sector. So yeah, I think we'll see more of it.
In terms of growth for the industry, are the same sort of drivers for the mutual bank sector as we see drivers for the Big Four? Do the same sort of things, factors?
Yeah, well, it's interesting because I think the Big Four can only grow in pace with the economy.
Yep.
You can't expect them to outstrip the economy, so if housing is only moving at a certain rate, that's all that's going to happen with the Big Four. Mutual banks can actually carve out a little bit more. I think they can say, look, if we get this right, if we market ourselves right as an industry and individually, we can really carve some inroads into other people's market. So I think we can see them outperform.
All right, Steve Mickenbecker, Head of Research at Canstar. Thanks for your time.
Thanks, Ingrid.